Okay, so the market ended up today. But just seeing green on the screen, that doesn't even tell you half the story. There was a real tug-of-war going on under the surface on February 18th. So let's dive in and see who really won the day.
So yeah, it was definitely a good day for the bulls. You can see here the Nifty 50, our main benchmark, jumped up 94 points to close at 25,819. And look at the Bank Nifty. That put on a really strong show, adding 376 points. What this tells you right away is that the good vibes weren't just stuck in one or two corners of the market. This was pretty broad-based.
But the real question is, why? What was actually pushing the market up? Because trust me, it wasn't just a simple straight shot to the moon. We've got to dig into the forces that were playing tug of war with the indexes all day. Okay, first things first, let's talk sectors. This is where you can really see where the big money was moving. And man, it tells a pretty clear story of who was winning and who was, well, not.
Yeah, it was really a tale of two markets today. I mean, look at this. On one hand, you've got metals and PSU banks just absolutely flying, both up a solid 1.3%. But then, you look over at the other side, and the IT sector, a real heavyweight, was getting hammered, down 1.2%. A huge difference, right?
So you've got this split between sectors, right? But how did that actually look when you drill down into the big dogs of the Nifty 50? Let's see who was pulling the rope and who was getting dragged through the mud.
And here it is, a classic tug-of-war. In this corner, wearing green, you've got the heavyweights like Reliance and ITC, giving the market a huge boost. But in the other corner, you have Infosys and a whole bunch of other tech stocks doing their absolute best to pull everything back down.
And check this out. This is a perfect example of how it all connects. See Tata Steel there? It was one of the top pullers for the Nifty today. And, no surprise, that strength is exactly what helped push the entire metal index up by that 1.3% we just talked about. See? Big stock moves are what create those big sector trends. It's all linked.
But wait, who's actually doing all this buying and selling? I mean, to really get a feel for the rally, you've got to follow the money. So was it the foreign players or the home team driving things today? Let's find out.
Wow, okay, the foreign institutional investors, the FIIs, they came in strong. They were net buyers to the tune of over 1,100 crore rupees. You know, when you see that kind of money pouring in from overseas, it's a pretty big vote of confidence for where the market might be heading.
And they weren't alone. That foreign money was met with some serious local muscle. Our domestic institutional investors, the DIIs, they jumped in too, adding another 440 crore. You add those two together, and that is a powerful wave of cash. Powerful enough to lift the market, even with some storm clouds brewing overseas.
Now, speaking of those storm clouds, they're rolling in from the U.S. And you might be thinking, hold on, why are we talking about the U.S. Fed when we're talking about the Indian market? Well, it's because what the Fed does doesn't just stay in America. Their interest rate decisions create ripples that travel all the way across the globe and absolutely affect investors right here.
So the latest update from the Fed shows they're basically walking a tightrope. They're stuck between a rock and a hard place. On one side, they have to fight inflation. On the other, they have to keep the job market healthy. And because they're so divided on what to do, it's creating a ton of uncertainty for everybody.
Okay, so there are two camps inside the Fed. Camp number one is for the optimists. These guys are saying, look, if inflation keeps heading down, then yeah, it's probably time to start cutting interest rates. And believe me, that's the music that global markets are just dying to hear.
But, and this is a big but, there's an equally loud camp on the other side. These are the cautious ones. They're saying, whoa, let's pump the brakes. Maybe we should just hold rates steady for a bit. And then, and this is the part that really spooks the market, some are even whispering that they might have to raise rates again if inflation doesn't back down. That's the real wild card here.
Okay, so that's the big global picture. Let's zoom back in now and look at some of the individual companies that were really making waves today. First up, we've got some great news for BL Kashyap. The construction company just bagged a huge new work order. We're talking 300 crore rupees for a housing project. That is a fantastic win for them.
Okay, if you're a commodities trader, listen up, because this is a big deal. MCX is getting rid of the extra margins on gold and silver futures, and that starts tomorrow. What's that mean for you? Well, it could make trading cheaper and really get the volumes pumping.
The good news just keeps on coming for some. Pace Digitech subsidiary landed a sweet deal, a new international purchase order out of Saudi Arabia, and it's a nice one, valued at $1.35 million US.
All right, but it wasn't all sunshine and rainbows.
Jindal SAW is hitting a pretty serious snag. A really important license for their seamless pipes, one from the American Petroleum Institute, has been suspended after an audit. That's definitely a challenge they'll need to navigate.
So when you put it all together, what's the story of the day? It's pretty clear, right? We had strong buying from both FIIs and DIIs, which was more than enough to overcome the weakness in IT and shrug off all that uncertainty from the US Fed. But that leaves us with the million-dollar question. Are the bulls really back in charge, running on pure domestic strength? Or is this just a temporary bounce before those global headwinds finally hit home?